Even with Tesla being down 4% today, we actually ended the day with Tesla being the highest confirmed bullish flow in the day with $225 million worth of calls. We're going to talk about this in depth in this video. We're going to go over the flow. We're going to talk about what makes it unusual. We're going to go over confirmed versus unconfirmed flow. We're going to talk about that Disney position that I opened. We talked about it in the video yesterday. We're going to go over when I plan to take my profits, and we're also going to go over the S&P 500. But let's get started first just by looking at the smaller time frame for the 15-minute. You guys can see here that our Tesla trading bot, which you guys can get access to for only $5 a month, is going to be in our Discord community, which is the first link in the description. So far, since the beginning of the new year, we have had 1, 2, 3, 4, and it shorted one more time overnight today. We saw a nice little bounce down here with a low of about $236, and then we consolidated back up to 40 and then rejected. I actually averaged down on my March calls, which we talked about in yesterday's video, and I said that I was planning to average down at $240, which I did. We will go over that position in this video. But tomorrow we have to make sure that we're able to hold that $240 support level. If we pop on our indicators, you're going to be able to see here that we have some volume that's forming here between $240 and $237, and also a bullish order block that came in earlier today at 10 a.m. From that point, we bounced, ran all the way up as we stated before, and started to sell off. So we zoom out here on the 4-hour chart, you're also going to see that this $240 level is one of the heaviest areas of volume on the volume profile. That's why it's indicated by this red line, and the red line is called the point of control. This is going to be a very strong support level, and you can see that multiple times before we have used this as a resistance and then a support, a resistance again, a support, a resistance, and obviously now we're coming back up onto this support level. I posted over on Discord and X, which you guys should be following both of those, the unusual flow that came through this morning. So I said there is an insane amount of confirmed bullish flow hitting on Tesla. I haven't seen numbers like this in a while. And you can see here within the photo that we had confirmed bullish flow, which we're going to go over exactly what that means. But $225 million on Tesla is very, very strong. A lot of people asked within this post, which was a very good question, if that's the case, then why is Tesla down so much? And without getting too in-depth, basically, the options market, the derivatives market, will not heavily impact the price of the underlying asset or the price of the stock. Meaning that if somebody comes in and buys $10 million worth of Tesla calls, it will not affect the underlying price of the asset or the shares that it's trading off of. Now, the confirmed aspect is extremely important, and I wrote a thread over on X, which I briefly want to cover because this is going to explain to you why 90% of flow or unusual options activity is shit and what you should really be paying attention to. Now, for those of you who are really left in the dark right now and you have no idea what we're talking about, what we're looking at here is unusual options activity. So basically, these are people who were buying call options, which is bullish, and they're confirmed call options, which we'll talk about why as we get a little bit further in this. But this is a really good way to indicate unusual buying patterns by institutions and find great times to find number one potential bottoms like we might see on Tesla right now, or to use in conjunction with your technical analysis. But all of these unusual purchases by these institutions are not important because number one, they could be hiding these or hedging these positions. They might be trying to make it so that we're not even able to see the position that they're taking, which is why understanding how to read this information in its own right is a skill, but a skill that's very easy to learn and a skill that I'm going to teach you within the next couple of minutes. Confirmed bullish flow. This is the gold standard in reading order flows. This is called confirmed flow because the trades have actually occurred at a specific price level. These trades come in below the bid, at the bid, above the ask, or at the ask. Why is this so important? When a trade happens below the bid, it means that somebody was so eager to sell their contracts that they will sell it below the lowest buyer. This shows that somebody is trying to get out of that position as soon as possible. So imagine that you're going to buy a position. So imagine you were going to go buy a house from somebody, and not only did they want to get out of the house so fast that they're just going to sell it for whatever you're willing to pay for it, but they're actually going to sell it to you for less than what you're even offering to pay. The low price that you want to pay, they're willing to go even lower. That signifies that they are trying to get the hell out of that position, or in this instance, that piece of property that they own, which shows that the person with the money is motivated. Trades at the bid and ask mean that the buyer and the seller comply with each other's prices. These are key because we know that options are confirmed buy or sell. If the order is not confirmed, this could be a hedge. So this is why we only care about confirmed flow, because if it's confirmed, then we can prove the direction, and if we cannot prove the direction, then we have no reason in following it. Now, the opposite, when a trade occurs above the ask, it signifies that a buyer is willing to pay a premium to get in, so much so that they're willing to pay above the highest asking price. This is one of the most powerful indications of bullish sentiment. And these types of buys were most of them above the ask, which shows that people are just trying to get into these contracts and they don't even care how much they pay. And we're not talking small sums of money here. Hedge funds and hedge fund managers are not stupid. Now let's talk about unconfirmed flow, because unconfirmed bullish flow is very tricky. It includes orders that were filled between the bid and the ask. These could be bullish or bearish, so we don't know for sure and we never take them into account. So let's just say that we saw $200 million worth of flow on Tesla. We can just go over to black box stocks, and if I go to the options tab, we can actually look at all of the calls for the day. You can see here $28 million, and you can actually see this bullish flow closed at $446 million, nearly double the $200 million that I posted about earlier. But if we weren't just looking at the confirmed bullish flow, these could be options orders where people are actually selling a covered call. Now, I know that most people here are actually long-term investors in Tesla, so I don't want to go too deep into what that means, but for every time that you or anybody purchases an option, there is somebody on the other end of that option. So if you're buying calls, meaning that you think Tesla stock is going to go up, there is somebody on the other end of that transaction who is selling you a call. So if you're buying a call and you think the stock is going to go up, inherently they are betting the opposite. So they are actually betting that the stock is going to go down. So imagine if you see $400 million worth of Tesla calls come in that are unconfirmed. And without this piece of information, you could think that they're buying and they're very bullish on Tesla, $400 million worth. But in reality, it could be a massive hedge fund or a ton of hedge funds putting a massive opening call credit spreads against their shares, actually hedging that position. So unconfirmed flow can be used to deceive traders, creating a false sense of market direction. And it's important to differentiate real versus executed trades with clear intention. So why do we focus on confirmed bullish flow? Because it provides tangible evidence of the market sentiment in real time. It's not based on intentions or possibilities. It's actually based on real transactions that are happening at very specific price levels. When you see confirmed bullish flow, you know real money is being put on the line and traders are willing to commit. It offers a more solid foundation for trading decisions. Now, like I've said before, just because they're putting money on the line doesn't mean that they are always right. I've had plenty of times where I have followed big money. You've seen it here on this channel, and they're wrong. I've had plenty of times, like with Las Vegas Sands right now, multiple times in the past month where I've been very, very right following their unusual flow. And to sum it up, confirmed bullish flow gives you concrete proof of the market sentiment, while unconfirmed flow is less reliable and easily manipulated. And as we said in yesterday's video, going over the weekly chart, we thought that max we could potentially see Tesla pull back down to 220. So as I stated earlier, I did average down on my position. I do plan to add 5 more March calls down at 225, setting a stop loss down at about $205 to $210. I am bullish on Tesla over the next 90 days. What happens in the next couple days doesn't really matter to me. I'm a day trader, and if you guys do want to day trade with me every day and get access to all my trading bots, all of our private indicators, as well as much more, you can use the second link in the description. But other than that, I have to remove my day trading and my trading mentality away from my swing trading mentality. And so while I might be picking up some Tesla puts throughout the day, as we showed with the trading bot earlier, overall, I'm still playing the bigger move, which I think will happen in the next couple of months. Now let's go over the S&P 500, because today we ended up opening, we were down 0.7%, and then we ended up pushing all the way back up to about 470, and then closing the day actually back down around lows. And you guys are going to see here on the daily chart that obviously the S&P 500 has been in a big push up. We saw this bearish order block come through, and we ended up pulling our way back. I think that if you're shorting the S&P 500, which I do have some puts in because I have a lot of calls for the next couple of months, but I have a lot of short-term puts in. Number one, just to hedge, and number two, because it looks like a really good setup. But the S&P 500, if it continues to hold into tomorrow under $470, you're going to see that we have a very thin area on the volume profile to the right side of your screen between $470 to $458. These thin areas on the volume profile are important because, as we talk a lot on this channel, this is where price tends to move very quickly between these thin levels of volume. So last time we had a push through this volume resistance level, we ended up actually running 2.5% in just 5 days, which for the S&P 500 is a very aggressive rally. So I'm not expecting SPY to crater its way back down, and it could potentially move down to fill this gap at 425. But at this point, we have to remember that the market is still in a major uptrend. We are pushing towards all-time highs, but it doesn't mean that we can't have a continued sell-off, maybe down to about 460 or 450, where we finally find a bottom and then maybe push our way back up to all-time highs. And so I know that for a lot of people, especially if you're newer to the market, you see everybody out there on Twitter or just different social media platforms shorting the market, and you feel to yourself that you have to. I just want you to understand that, like, one of the simplest ways to make money, and it's really not sexy and people just really don't talk about it enough, but it's just to trade with the trend. Like, if you've been trading less than 3 years and you've never been consistent, you've never been profitable, to trade against the trend, it really is just like killing your own portfolio, because to go against the general trend, number one, is just very tough mentally, but number two, you have to time it to absolute perfection. Whereas if you just traded with the general market drift, you will make money. Understanding how to find a basic trend and playing that trend is the easiest way to make money. And the best part is you don't have to pay thousands of dollars in courses and seminars in order to learn how to do that. It's very simple. So while the S&P 500 does look like maybe we could pull back a little more, we do still have this very strong trend. Now let's go over Disney, because we talked about this in the video yesterday, and I'm up about 33% currently on this position. But I want to go over if this is still worth getting into and why I ended up getting into this position in the first place. As you guys can see here, obviously Disney has been in a bit of a downtrend, but as of recently, we have actually broken over this general downtrend that we've had. Pushing up over 85, we have this nice gap that formed here. We've been consolidating into this descending wedge, and it looks like we should get a breakout and a push here. To the right side of your screen, like we talked about on the S&P 500, we have a thin area volume profile, this time from 92 all the way up to $96. So basically, if this trend line can actually break out and hold, we should be able to see this break to the upside and this potential rally up to about $98. Now, last time you can see that we had multiple times that this actually tested that potential breakout. We ended up pulling our way back down. I contemplated closing some of my position out today when we were trading up around 92, because I'm not sure if we're really going to get this big breakout within the next couple of days. We have a strong resistance here, but once this does break, we should see a very clean breakout. And if we take our trendline resistance level and we draw it out on the daily, you'll see that on the volume profile, we have no volume until up at about 100. And then from there, we have a volume block up at about 110. So I think the upside potential on this trade is huge if you can be patient for the next couple of months. I hope that this video helped, guys. If you have any tickers that you want me to go over, please comment them down below. If you guys want to get access to private videos, as well as our Tesla trading bot, our NVIDIA trading bot, our courses, seminars, and much more, go and join the private Traders Helping Traders Discord. It's only $5 a month. You guys get access to all of that. And if you want to get access to the full suite of trading bots, all of our private indicators, all of my real-time alerts, that will be the second link in the description to become a private academy member. Thank you guys for all of your support. It truly means the world to me, and I'll see you all tomorrow. Peace.